Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions, bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk as we start a brand new month and a new week. Happy Monday. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. You can find all our social media there, all of our streaming sources, listen to past episodes, and much more. Well, we had a pretty active start to the month of November in the market trade. Let's talk about it. Let's bring in John Heinberg with Total Farm Marketing joining us on this Monday. John, good afternoon to you. Happy November and a very active, very busy day in these grain markets led by wheat today. We think about it, entering a new month, there's new money flow into the market, and that really took off with all three wheat markets here today, it seemed, John.
Yeah, wheat was definitely the leader today, posting 20-cent wins across the board at all three classes, including putting new contract highs in each of those classes on that December or that front month contract. So we're really seeing the money push in, basically, again, technically buying this as well as watching the global side of the equation. There's just a lot of demand for wheat right now. And, that might be the ultimate inflation play because a lot of these countries, and as well as even here in the United States, trying to lock in food supplies, and wheat can be one of the backbones there, and that obviously led over into a good day in the core market. Now the question for me on wheat, and not that we don't deserve these price levels, especially given the supply picture and the issues that we've dealt with this year, but where are we at on the demand side of the equation? We got export inspections today, 115,000 tons on wheat. That was below expectations, below the bottom end of the range. Will we be able to move the wheat out here, or basically we just pricing ourselves out of the feed bunk and trying to get a few extra acres in for next year? But lofty levels, great opportunity for producers there in that wheat market, and curious to see where it goes from here, especially looking at that spring wheat contract with the issues in front of it and where we are on those charts on the historical levels.
Yeah, John, wheat and also to an extent oats as well. I mean, we were talking about this before we went live. $7.50 oats on the board, closing up 21 today, 7.50 and 3/4. I mean, you see these numbers in these small grains and in wheat, and you look how it translates to everything else. We talk about the inflationary plays here in the market and everything else, and I'm very. If I was a farmer right now looking at my balance sheets, wrapping up harvest and looking at making some sales and looking at my bottom line, I just feel like there is a lot to consider. And, you almost want to be like, well, it's going to go higher the way this is looking to me. But at the same time, man, these are some good price levels to really take advantage of right now, John.
Yeah, they are. And there's going to be a lot of management questions that's going to be in front of producers when they start balancing everything out here, where they are on the cash flow side, where they are in the input cost side, where's our rotation going to be? Like I've seen talking with a few people, some guys are thinking about a little more wheat this year. They haven't planted in a long time. And just because that market's got some opportunities for them. And that's some of what will probably carry us into the spring is just going to be this ongoing battle for acres. Now, what can dampen that? The demand side of the equation. Okay, we got some pretty lofty numbers out there. We still need to see those numbers get met. If we start seeing the USDA add back onto the pile because the demand numbers aren't there, that can be a real quick wet blanket over top of all these markets regardless. So that's still something we got to really keep an eye on as we go forward. Looking at export inspections today for corn, beans, and wheat. Keep an eye on those sales numbers, where we are to last year's pace. What are we going to have in front of us here when we get into that February-March window when the USDA kind of starts looking at the balance sheet and says, we're about 100 million bushels off on corn shipments, or we got another 50 million we could add into beans. And next thing you know, these carryout numbers, which are on the tighter side at this time frame, can fill up pretty quickly and build up those supplies.
I know as well, we got a WASDE report coming up next week, and we're going to start to get some different private estimates out here this week, including StoneX. Their customer survey comes out this afternoon. And I know with all of these different private estimates out this week, the market's To me, that feels like that's going to be, unless there's something that comes out unforeseen, that's going to be the big news item we're going to be watching. That and crop progress this afternoon, obviously, as well, seeing where we're at. I just wonder how much, as we square ahead of this WASDE report next week, how much these numbers, how much crop progress could add a little bit of fuel to this fire or not this week, John.
Well, the November report will be fairly key again. That'll be the last time we get a yield adjustment till we get into January, as well as just some movements on the balance sheet side. Expectations are for the yield numbers probably for corn and beans to go higher. We'll have to see if that gets realized or not. That adds that supply pile right away. Realistically, of the two, probably corn stays the more friendly of the two because we do have a demand story underneath this. You got an ethanol market that's red hot. You got good producer margins out there in terms of the ethanol producers. We have a growing production level with declining stocks. That means what's getting produced is getting used, and that's going to keep them active in the market. And you go look at some of the cash bids that ethanol is putting forward right now. That's where the money is for the producer in terms of them trying to secure supplies well into next year. And again, cash market keeps that elevated overall. Soybeans, probably the other side of the coin. There we're looking at a possibility of a supply build that could be very quick and aggressive going into 2022. On our side, we already saw the numbers jump up to that 300 million bushel carryover at the last set of reports. What if they add another half a bushel per acre on here and don't make any demand tweaks? That puts us pushing the 400 million level, and that's starting to get pretty heavy. Then we're watching what's going on in South America. Currently, that their planting pace, today came out at 52% planted. That's one of the best paces in history. So they're getting that crop in the ground. The weather looks good. This market's going to start keeping an eye on that pretty soon here because what it's feeling like right now to us, at least on the demand side, is China as well as the other importers of our U.S. beans are getting enough to get by, and then they're going to really focus on locking in that Brazilian crop when it's harvested next spring.
You mentioned soybeans and you mentioned, the demand story. And I know we saw a 4.85 million bushel bean sale to China announced this morning, but, really that didn't help out the soybean market today. I know there is still some good money flow into edible oils here today and whatnot, but it just feels like soybeans, no matter what little nugget of news we throw that market's way, it just doesn't want to help. We just could not hang on to the strength in beans that was probably spillover from wheat and corn today early on, John.
Yeah, it was. I mean, you go look at the overnight trade. We were 14 cents lower on the lows last night, and then we rallied nicely as we got that buying strength coming in from corn and wheat. Beans became the backside of that story a little bit, I think, this afternoon as we saw some profits coming off. Again, you're looking at a potential, quick build of supplies between U.S. and Brazil. Even with the demand pace that's out there, it gets a little nerve-wracking when you look at it. So right now this market is really thinking about we want those corn acres, we need those wheat acres. Again, those are inflation plays, they're food plays, and the bean supply of the story looks a little bit fuller at this time frame. Now we will have to keep an eye on that oil. You mentioned that very quickly. That's still a major component of this. That biodiesel component that's kind of being pushed out there, really bringing some life into that market. But that bean oil market makes me a little cautious too at times because it's tied to crude oil. Even though we're a little firmer on crude today, we did put our first negative weekend last week on crude oil in 10. So that might be telling us that chart could be getting a little bit soft and might be ready to soften up a little bit, which could, again, put a little bit more weight on that bean oil market and carry that into that soybean market.
John, one more point on wheat here. Do you feel like wheat is in an overbought technical standpoint here at this point, especially after today's big move higher?
It's in that window, and that's probably some of the biggest things that concerns me about wheat. I mean, we've seen a lot of money flow in it. The funds actually, in terms of Chicago wheat, last week on Tuesday when commitment traders gets put together, we're still sitting slightly negative. So there's still some money that can come into that wheat market. Again, that is only in the Chicago. They have ownership in both KC as well as the Minneapolis wheat. So there's still some room in that regard. But again, we're getting to that window here. We're going to start really seeing maybe with the winter wheat crops coming together. We'll start talking about those acres for spring, the spring wheat here as we get past the first of the year. And that might be a spot where we just maybe start peaking out. And the one thing that concerns me about wheat is all of a sudden the global supply starts settling down, or the U.S. dollar starts moving and U.S. wheat doesn't compete on the export front. We'll quickly pull premium out of that market so we can get back into shooting range in terms of what those exporters are looking for.
Looking as well at the outside markets and how that's all playing in. I know you mentioned crude oil briefly there as well, John, but looking this week, as we start the new month and, see all this money trying to find a home, and we got to talk about the Fed on Wednesday. They're expected to look at some tapering maybe. I know there's just a lot of news swirling around the outside markets and things the Fed might do here this week. What are your thoughts on what we're seeing on Wall Street and the outside markets and how that's translating into the ags right now?
Well, it brings some concern, obviously. We got a lot of different moving parts out there now. We start November into December, typically one of the stronger windows for equity markets going forward. Now, with that, we touched 36,000 a day on the physical Dow. So, we're continuing to see good strength flow into that market. Again, it's cautionary because who knows what happens with the money supply. Yeah. Now, getting too technical, we're watching the bond market right now, and what we call the yield curve is starting to flatten out, basically meaning that the market wants to get those interest rates up, and we'll see if the Fed starts accommodating that in that regard. That could all be a precursor to what could come into play in the equity markets if they think money's starting to tighten. So things we have to really watch. I'm still kind of cautious. We get to the end of the year, what happens with some of these gains are in these markets? Do they move that money to the sidelines and just capitalize on those gains? We've seen that happen before with some pretty difficult sell-offs around that, middle of December into Christmas window. So I'm a little cautious there. That keeps just me keep thinking about that for producers. Right now, the way this market's moving, you can put some great puts underneath the bushels that you've got stored into the spring. Don't have to spend a lot, but at least you can say, hey, I want to lock in a $5 floor till May or till July and still have something there. I hope we're wrong with that 15 to 20 cents and this market stays at these levels or higher.
A lot of things to consider, John. And I know, again, as we start to wrap up fall harvest, we'll get a better look at those numbers here this week. I think we still got a little ways to go, but I think once producers are putting the combines away and putting the equipment away here in the next couple of weeks, it really feels to me they're going to be sitting down, taking a hard look at their money flow and at their marketing plans, just with everything that's swirling around these gray markets right now.
No, I agree. And there's some opportunities out there. Heck, I mentioned to one of my clients today that December 23 corn was at 513, and he was kind of intrigued by that number a little bit. It's going to be an opportunity in here. Producers, like I said, can put the pencil to it a little bit, stretch out some paperwork, figure out where we are. D's 22, 555 on the close today. That's a heck of a starting point. I'm kind of talking producers, get to that 20% sold, at least get the toe in the water out there on some heads to arrive or something along those lines. And even $5 puts today aren't that expensive, 27, 26 cents or so, to put a floor underneath this market all the way out till next December. So, at least from there, like I said, if you're wrong and that 20 cents goes by the wayside, at least you got $5 corn board price in front of you or better. So it's still something that, can help start that planning. And then we go from there as we get into the year and what we really need and what we can accomplish in terms of our marketing goals.
Let's switch to livestock here briefly, John. The hog market today, it was kind of trading choppy, ended up finishing slightly higher. And, I've heard some talk in the last week or so of a double bottom in this hog market. And, I just look at the long term, outlook for this hog market isn't super bright, but here we come in today and it ends up being the brightest of the three livestock markets. What are your thoughts on hogs today, John?
Hogs put a heck of a turn in last week, looking at that December contract, talking about that double bottom around 72. Seemed to reject that level really quickly last week on Friday and get that nice run higher, or Thursday into Friday. And then today we kind of consolidated. Now, chart looks a little better. I'm going to be cautious of that. We still got a heck of a basis put together between the index and the futures. So does that keep pulling prices a little higher? I'm going to focus a little bit maybe more on that February contract. If we consolidate here, get a little further push, if we see some fundamentals start coming around, retail carcass values stabilize and get some bid. Biggest thing is that cash market maybe getting some bid. There's some room for that Feb contract and maybe get back into those low 80s. But at the same time, you got to stay cautious. It's a market that's going to move quickly. We're watching the demand side. That's a bit of concern. We had a nice turn in those summer contracts, got back above $90 level by a couple bucks here the last couple of days. Probably a window to make sure you're building that floor, make sure you got something covered. Again, we're gonna have a lot of volatility in that market. And I'd rather watch, puts go worthless and keep the top side open.
And I wonder on demand as well. Everybody's always been focused on China, it seems. China when it comes to pork demand, but yet, someone else that's sneaking in here that's maybe almost, getting as much attention or needs to as Mexico. It almost feels like, as we keep seeing Mexico stepping in and buying pork from the U.S. And that almost seems to be another market that we have to keep an eye on from a demand side as well.
Very much so. I mean, obviously the China level is important because that's that extra demand beyond what we normally get out of Mexico or a Canada side in terms of our pork trade. So it's good to see those traditional buyers stay active in that market. Who knows, maybe they're just a middle person between them and China, moving some product overseas that way as well. We've seen that happen before in terms of that market style. But again, those traditional buyers are key, whether it's even for cattle on the beef side or as well as that pork side. Seeing that South Korea, Japan purchase, the Mexico purchases, they're still keeping active in this market. They have that demand, and it's going to be something that we need to support. The thing is, this market was really counting on, like you said, again, those technical traders, those speculative traders. They're looking at that Chinese demand. How long will that carry out in the next year? Last week's export sales numbers did not have China on them report for any new purchases. So that's a bit disappointing to me in that market. I think that's some of what we've had to unwind here recently is just the players that were watching that and all of a sudden realizing that maybe that demand's not going to be there to the level that we think it is.
And over in cattle today, John, this feeder market really flipped around midday, and I'd have to think the higher feed costs probably played into that a little bit. I felt like last week was an okay week in cattle. We got some good cash trade. It was $4 higher in the south, $2 higher, or I believe in the north as well. I think I got that right if I remember right. But I mean, we saw some good cash activity last week. But I don't know, this live and feeder cattle market. I'm just kind of curious what's going on here.
Yeah, that weak feeder market obviously tied to the strong grain, so that's a component of it. Look at that May contract, $3.50 or $3.40 lower today. That's the lowest close now since going all the way back till May in that contract. So that's a little bit disappointing. I think I said May, the February contract there.
Mm-hmm.
So that's a little disappointing to see that market kind of break down technically like it did today. We're hoping we could hold some trend line support, and it just kind of faded right through that. Again, probably tied to what's going on in that grain market. Usually they are tied together. Expensive grains, cheap feeders, just because of the lack of demand. That had some spillover into that live cattle market. It just kind of feels like going back to the lives, even though we got that little bump in cash last week, just the way the market kind of reacted to it, it kind of felt like, maybe we're good enough here for a while. And we could be on a bit of a slide despite some of the fundamentals. It seems like this market gets a little momentum, has a chance for you to hedge up a little bit, watch the market drop back, and then you go ahead and get out of your hedges. So that may be where we're headed. Again, the close today, kind of at the weaker side. We got a bit of a mid-range level that we held today, but maybe got some room to drop this to the bottom of the range. We'll see what that cash trade does for us going into the end of the week. Obviously, nothing getting started today, but expectations are for cash to be a little higher. Maybe the Packers are a little short bought after last week, so we'll have to see how that shakes out. But right now, a little bit cautious, definitely what's going on in that feeder market with that close today.
Well, John, a lot of great stuff as always. Any other final thoughts you have for us on this Monday?
I say it before, and I know I use the word puts all the time and talk about them, but they do have tools. Producers need to sit down right now when they're getting to that stage. I know they're extremely busy wrapping up harvest and getting those things put together, before the snow starts flying here pretty soon. But take a look at the markets and ask yourself, what is my biggest risk? Is it downside movement? Is it upside movement? Then reach out and talk to somebody about how you can protect yourself, whether it's doing the cash sale, locking in a hedge to arrive, picking up some puts, and try to minimize that downside risk or minimize that biggest risk that you have in front of you. And right now, for most of these grains, it's probably risk to the downside, just given where we are in the supply picture.
Well, John, if producers need a little advice, need some help, I know they could reach out to you and the folks there at Total Farm Marketing. What's the best way to do that?
Sure, love to chat with them anytime. Give me a call, 800-334-9779, or shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget to check out the website, totalfarmmarketing.com. A lot of great information there for producers to take a look at.
John, appreciate the time as always. Thanks for joining us on this Monday. Have a great week. We'll talk to you next week.
Sounds great, Jesse. Have a good week, everybody. Talk to you next week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the Monday, November 1st edition of the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.